Hello, welcome. You're watching Market Guru on Bloomberg TV India. Joining us today is Vikas Khemani, CEO of Wholesale Capital Markets at Edelweiss Financial Services. Vikas, thanks so much for taking the time out to talk to us. Let's start off by talking about the big talking point that the markets were awaiting, and we got some clarity as far as the RBI policy is concerned. What did you make of the RBI policy, the statement there from the governor as well, and how do you see the market now taking that into account?
See, as far as the RBI policy is concerned, I mean, I think it was in line, in line with expectation and in line with what governor has been saying in the past. And I think they maintain their stance that they would want to see inflation coming down and before they do anything on the rate cutting cycle. So I guess this is in line with what they've been saying, and I think that's how it should have been. And till the time inflation comes down, I guess RBI will not cut it down, and which I think is a very fair stance. So, and which is also government's focus as well. Okay. So if you see, I think in my opinion, I remain very, very optimistic about equity markets, Indian equity markets. For the simple reason, I think the macro setup for Indian markets is very, very nice. I mean, you are at the bottom of the earning cycle. Earning cycle is picking up. Your macros are sort of more or less, bottoming out. Your interest rates is peak. Investment cycle is bottomed out. So I think from here on, things can only accelerate. And I think on the top of it, you have a government which is talking about things. Like fiscal deficit, fiscal prudence. They're talking about, doing some of the reforms which have been much awaited, giving boost to the, infrastructure segment. So I think if all these things sort of happen, according to me, this kind of equity setup generally is very rarely seen. If you look at in 2003-4 cycle, that time, you didn't have such a high interest rate. So all I'm saying is that right now you are coming down from a high interest rate. Low growth cycle, so you have a cyclicity, you have growth boosters ahead of you. So I think, in my opinion, I remain extremely bullish on the market from a medium term to long term perspective.
Will it be a smooth ride up, or do you think like we've seen some hitches and consolidation phases? Do you think that will continue and that will give an opportunity for people who are optimistic to come into this market? Because some would get scared at 26,000, saying what is the upside from here? But do you think any of these mild corrections even that we see would be a good entry point into this market?
See, I think whenever you're talking about a structural bull run, markets are never one way. I mean, they will always come with sort of volatility, and those volatility can be induced by a quarter's earning disappointment, an international event, or any event could come about. And I think if you are convinced about a long-term sustainability of the bull market, every steep fall is a great opportunity to buy, because I think cheaper you buy, better your returns are from a long-term perspective. So I am in my mind there's no doubt that every fall would be a great opportunity to sort of increase your equity exposure.
Last time we actually spoke, you'd come back from a road show, you used to interact with some of the foreign investors. Currently, are they still bullish? Because the fund flows may have just they're still strong, no doubt. $26 billion coming in on a year-to-date basis. July alone seeing a huge amount as well. In terms of the outlook from here, are they still sounding optimistic? Is there an expectation that what we saw in the first half can be repeated in the second half?
Oh yes, I mean, in my mind there is no doubt, based on my opinion. Secondly, I think based on the interaction with some of the global funds. Okay. I think, global funds are looking at India in a very, very different light. Mm-hmm. I mean, tactically anything could happen. They might, wait to invest for a correction. Tactically I'm not talking about. But if I were to talk about structurally, and I think let's say second half or next year for that matter, I think so far what money we have seen has come from emerging market, increased emerging market allocation. And that money has so far come in, but I think from large global funds, which are, which can put, even if they put 1%, we could get 5 billion kind of number. So they are large global funds. They have not yet started investing into equities in India. So I think when they take time to really, sort of act, they can't, election results are out and tomorrow start investing. They take time to act. So I think incrementally, every large global investor has been, thinking, evaluating India and how to play in India. So in my mind, I think if the government continues to execute on the plan they have chalked out, and I think as things start improving, I see no reason more money would not come in. In fact, I would tend to believe that we will see unprecedented money flow coming in. Also, I think this is one India story. Also within the emerging market, if you look at, I think India weight is still very small. True. It is less than 10%, and within emerging market, no other equity market, no other market offers this kind of setup. from a macro perspective, from earnings growth perspective, from all perspectives.
True.
So I only see weightage in the emerging market funds also increasing. So it could be function of all. I mean, new money coming in, weight increases. So I see no reason why, and also global equity market environment itself is very good.
Right.
So, if let's say they're talking about interest rates going up in the US in, let's say, next 12 to 18 months. So if the interest rates start going up, I think somewhere money will have to move out, right? So I see no reason why, equities, in particular Indian equities, can do very, very well.
Let me talk about the other side of the fund flows, the domestic investor. We've seen some bit of concern now coming in the mutual fund side, the debt mutual fund side. Do you see some of that money coming into the equity as people will find new avenues to invest? And it's giving phenomenal returns. If you look at the last 5 years, equity MFs doing far better now on an average return basis. Do you see that the confidence in the retail investor or even the slightly more advanced retail investor, the DII, to come back into this market with a stronger force?
Absolutely. I think if you see last 2 months equity flow number, they have been historical. I think the month of July got 6,000 crores of flows into equities, which was, I think, historical. So I think the trend has already begun. It obviously takes time to because I think mutual fund industry went through a consolidation phase. I think now new schemes will get launched. Distribution are getting their act together. Distributors are getting their act together. So I think it takes time. But I have no doubt in my mind that Indian investors are heavily underinvested in equity as an asset class, and this number can go only up from here, and this number will, as we move forward and as the markets do well, it will keep on accelerating. So in my opinion, it's a great time for mutual fund industry as well, because I think any market rise and incremental flow helps them a lot. So I am very, very convinced that Indian retail investors would come into equity markets in a big way.
Alright, Vikas, just hold that thought. I'm going to take a quick break right now. But when we come back, we get a little sector specific with Vikas Khemani and ask him his top strategy in the Indian market. Stay tuned, that's coming up on the other side. Welcome back. You're watching Market Guru on Bloomberg TV India. We've been in conversation with Vikas Khemani, CEO of Wholesale Capital Markets at Edelweiss Financial Services. Vikas, we were talking about the market outlook and the strategy. Let's talk about a couple of sectors, and one that I've been talking about this for some time, and I track it pretty closely, has been the industrial bit as well. Last 6 to 8 months, we've seen a decent amount of outperformance coming in for all these counters. Is the story still intact? Because the last few days or so, they've just done a little jittery after a couple of the earnings that came out. But in terms of the entire sector, in terms of the outlook, when we talk about the industrial space, how are you looking at it?
So as I said, that I think industrial space is a very much links to GDP growth, and I think whatever we have seen, whatever stock performance we have seen has been from a significant undervaluation to a fair valuation. Now I think that for returns to deliver, I think the earnings need to happen, earnings need to catch up. And I think that's the reason you saw a little bit of disappointment in the recent quarterly earnings. So I think somewhere expectation got built ahead of the time. But I do believe that as the economic growth picks up, as the IIP number picks up, as the investment cycle pick up, it has to do well. There's no doubt in my mind. If either you believe in change of the economic growth, or so if economic growth you believe in, you have to play it through industrials. And if you can go and look at any cycle in the past also. Whenever IIP number starts picking up, whenever GDP growth accelerates, industrial is the one segment which does very, very well. I mean, we recently did a study, and from 2003 to again we looked at the same cycle, and even if the top line growth is higher and bottom line does not catch up, still most stocks end up doing well. Well, we do believe that this time you will see both top line and bottom line both growing very well, and there is no reason why it will not. But so I think industrial is the one sector very much aligned to economy, and it will do definitely well.
When we talk about the other sector that's aligned to the economy but has got a mixed reaction from the market, but I know you've been bullish on it, banking, Vikas. With the same logic, is it just obvious that you can't have this kind of growth, this kind of revival in the economy without the banks participating?
Absolutely. Again, similar, because if you are growing, economy is growing at anywhere between 6 to 7%, banking credit growth will happen anywhere between 18 to 20%. So banking has this typical classic cycle. I always say that you had a situation where there was extreme amount of high NPA and significant undervaluation of the stocks because markets were worried. Now what you have walked so far is that from acceleration to NPA, you have gone to a stage where there is a deceleration of NPA cycle. Now there will come a point where you will start seeing stabilizing of asset quality, and post that there will be credit growth. and also that will get coincided with somewhat interest rates coming down. So these two big drivers of return or growth for banking sector is yet to come. So far whatever we have seen is from deceleration to asset quality, acceleration in the deterioration of the asset quality to sort of stabilizing to deceleration. But the moment it starts improving, growth coming, start coming, and the interest rates coming down, these according to me these are big three drivers still yet to come in, and that they will pan out in next 3 to 4 years. I again will take you back to 2000 2-3 cycle, and you start from there. State Bank of India used to trade at 200 rupees, and you saw what kind of return came in next 5-7 years. So I see no reason why it can't happen again, because still the kind of banks we are talking about, our market capitalization of the banks we are talking about is very tiny as compared to any economy in the world of our size. So I think these stocks here and all category, it's not only small, large, all categories will do very well in that.
So we started off talking by what the outlook for the market is, because I'm going to drill down a little bit more on this one. The point is 26,000 is what the Sensex is trading at. It's difficult for any retail investors to actually go ahead and, after seeing what's happened to this market in the last 10 odd months, to go ahead and buy even more. How would you convince somebody saying, well, there is still more upside, there are still a couple of factors, and which are some of those factors the one probably needs to watch out for that can take the markets even higher from here?
See, one simple, stock market returns are delivered by, or equity returns are delivered by two factors.
Okay.
One is the corporate earnings growth.
True.
Second is the re-rating. These are only two drivers of the, So if you do a little bit on the corporate earnings growth and look at the history, any time you pick up in the history and find a multiplier to the GDP growth to the corporate earnings growth. Typically, you will find if earnings grow at GDP grows at anywhere between 6 to 7%, corporate earnings will grow anywhere between 18 to 20%. That's a standard ballpark, and it can accelerate also if some of the reforms and other triggers we are talking about. Currently, even if you don't factor in that, your earnings growth can happen 18 to 20%.
Okay.
So let us say take a base, and if you just compound 20% over 3 years, it makes it 1.7 times. And you assume if you're talking about a global setup and easy liquidity scenario and more people coming into, little bit of re-rating of 14-15 P, if it's going to 16-17 P, you can easily get to 2x. So in 3 years, primarily driven by earnings growth of 20%, and let's say a little bit of rating, 20% re-rating from here of the price earning multiple can take you to 2x return in 3 years from here. It's a simple plain mathematics. Now if you go and sort of peel and say that will you get 18-20% earnings growth and all, you just need to look at the numbers of the history and you will get a lot of answers. So in my mind I have no doubt that corporate earnings will grow, and this re-rating, every market happens. I don't need to explain any investor. Every market it just happens. Sometimes I'm talking about 20% rating. I think it will tend to overextend. If let us say, if I have no doubt in my mind that if let's say government delivers what they're talking about, even half of what they're talking about they deliver, I think there will be significant re-rating in the market, because world markets are watching about, investors are watching about fiscal consolidation, labor reform, GST reform, all those things they are watching out. If that happens, the conviction around India's story will keep on getting built.
Alright, so 2x or so from that's a view coming in from Vikas Khemani. Vikas, thanks so much for joining in today and getting us our perspective in terms of the way the markets could actually play out. That's a view coming in from Edelweiss. We'll take a quick break on this side, but stay tuned. More news continues after the short break.